Ever since I started investing, I've heard this saying, sell in May and go away. This year, there is another theory in talks. Markets will retest March lows. After gaining 30% and having the best month since 1987, should you pay attention to these theories and maybe sell and go cash for a bit? Let's talk about it. What's happening, everyone? Welcome to Think Finance. My name is Raj, and on this channel, I talk about personal finance, investment ideas, money management tips, and all things finance. If that sounds you, consider subscribing. In this video, I want to investigate the sell in May and go away saying. Look at the bulls and bears take on this, and then of course, share my 2 cents on this topic and what I'm doing. So why this saying? Sell in May and go away is a warning for investors to divest their stocks in May and wait until November to reinvest. This is solely based on historical performance of the stock market. Let's take a look at some data. This goes back all the way to 1950. Typically, return between May through October is on the lower end. If you look at various 6-month returns, May through October returned 1.5% on an average. These have been the worst months for investors. Here is another interesting chart, and remember, we were in the longest bulls market stretch on record. Stocks have actually been higher during these worst months, 7 of the past 8 years. So that means we should stay invested, right? Let's look at what's happening right now. So far, the Dow is up 28%, the S&P 500 is up roughly 27%, and the Nasdaq has climbed 25% from March lows. The question analysts are asking, will the US stock market retest or hit the March lows before moving higher? If history is any guide, when stock market slides in a bear market and makes a low, in our case March low, it tends to return to that low and go even lower. Indeed, if you analyze 26 bear markets since 1928, markets have retested lows 60% of the times. Okay, so May through October, investors can expect pretty much flat return, and there is a 60% probability to retest March lows. Sounds like we should stay on the sidelines. Yes? Let's hear the bull's argument on why the markets can keep going up. Markets are still off the all-time highs, and we are in middle of a V-shaped recovery. America is reopening, and that is a good sign for business and economy. All is going to be good soon. We are making progress in terms of treatment and vaccine development. Looks like Gilead is going to give us the magic potion. Fed is ready to pump more liquidity in the market and do whatever it takes to keep the economy afloat. Investors are baking in all the bad news out there, including recession, poor earnings, COVID-19 impact, and are investing based on what they expect from companies a year from now. Here is what bears can potentially argue. Virus is still out there and we are still not out of the woods. While we may have made some progress, vaccine is going to take another 8 to 12 months. Economic news is telling the real story. 30 million people have lost their jobs, consumer confidence is at record low, and GDP contracted by 4.8%, and it's only going to get worse. The recent rally is a relief rally driven primarily by Fed stimulus, reopening of America, and FOMO, or fear of missing out. This is a classic bull trap, and based on history, we will retest the low. Yesterday, Trump threatened to slap new tariffs on China and reignited trade war. And this historically is bad for the market. A lot of health leaders out there believe we will hit another wave of COVID-19 and we are reopening too soon. Okay, so what does all this mean? No one really knows. Analysts have been talking about a bear market for years, and when we finally got one, it didn't even give investors a chance to breathe or think. Also, no one anticipated a 30% rally so quickly in a matter of days. I think it makes sense to be cautious for a bit. Here is my 2 cents. We just had the best month since 1987. The virus is still out there with vaccine few months away. Economic indicators are worse than anything we have seen in history. We may have just opened up America, but that does not mean people are going to be out there and hit the movies, restaurants, and plan vacations. Also, it makes sense to see how the opening of America goes. We are yet to see if COVID-19 will hit a second wave. Earlier today, Warren Buffett discussed in annual shareholder meeting that pandemic brings a lot of unknowns. Markets can do anything and nobody knows what's going to happen. Maybe that is the reason Berkshire Hathaway is still sitting on $137 billion in cash. So, am I selling my stocks? Of course not, but I'm also not doubling down as I did when markets dropped big in March. I will, however, stay on course and continue making my monthly investment contributions. And if we do hit March lows, I may increase my contributions again. As I've said in my past videos, hunting for a bottom or timing the market is silly. Instead, have a systematic plan, automate your investing, and stick with it. Okay, that's all I have, guys. Thanks for tuning in. If this was helpful, hit that like button, and if money gets you going, consider subscribing. Stay safe, and until next time, peace.